All right, what's up, folks? I hope you all had a good week. It was an interesting one, to say the least. So we had the Federal Reserve on Wednesday, and things got a little bit choppy. And then on Thursday, you had the big move there for technology into brand new all-time highs. And then to finish off the week here today, things getting a little bit soft. So, with technology over here, what I've been looking for over the last few weeks was this daily squeeze firing to the upside for a push into brand new all-time highs, and that's a move that we got there. So you had a good few weeks here, I think, to take advantage of that momentum there for technology. So my pick was Google, built a position here in the daily squeeze. There was a few more lower time frame squeezes along the way that I built positions in. All said and done, from point A to point B, closed about, I think, just shy of $20,000 of profits on Google. So that was good stuff. And then Amazon here, beast mode as of late. So with the tech stocks, I got the move I'm looking for. And I think you look at, you look at Amazon, you look at Google, you look at Facebook here, those charts are all extended. So potentially technology could continue to go higher, but this isn't the spot where you want to load the boat up here at +3 ATR. So good stuff out of technology. However, there's a bigger story here, so to say, when you look at the structure of the S&P 500 and you look at a few different sectors. So for the last month or so, we've had this daily squeeze for the SPY, and it's had a good structure. Just continues to chop back and forth here. So in this buildup of energy, if you're looking for that squeeze to fire to the upside, you're going to want strength and momentum in the individual sectors. Just the opposite here, the industrials, the transports, the financials, they're starting to roll over a bit. That puts a little bit of pressure here on the SPY. So look at industrials. Now that's breaking down. Daily squeeze fire short. You're at -3 if you look at the energy sector. Now that's breaking down here if you look at the financial sector. And these are all recent leaders. Financial, this daily squeeze fire short. You're down at -3. And then the transports, that daily squeeze fire short, and you're at -3 as well. So as we start to see signs of distribution for a lot of these different sectors, there's just this growing probability that the energy that we've been building inside this daily squeeze for the overall market ultimately fires to the downside. So things got pretty soft here into the close today. And what I'm thinking at this point is over the next few weeks, we could get a pullback here to the weekly 21 EMA, which we haven't really tested since October, November of 2020. So it's been quite a while here, but keep in mind, we could pull back all the way to that weekly 21, and it doesn't change the bullish structure of the weekly charts. That uptrend is still very much intact. So more than anything, if that does unfold, it's going to look pretty ugly on a daily chart. However, it's a pretty healthy pullback from the perspective of that weekly chart. So with the daily squeeze here, I get this loss of momentum, closing under the 21, closing under -1. I do think over the next few weeks, we're looking for that flush down towards 40.50. So could be dead wrong here, but this squeeze has been building up a lot of energy. That energy has to get released. And once you start getting distribution in a lot of different sectors, and the leading sector, technology, is a little bit extended here, I think you see that squeeze fire short. So I did throw on a short position here yesterday. And I got an August expiration call credit spread on the SPX. I got short strikes deep out here at 4,300. However, given it 60 days, there's some good premium. So when I took that position yesterday, I think I was getting close to a 1-to-1 risk-reward ratio. If you did it on one contract, see, I did it on 16. But if you did it on one contract, you're risking about $1,100 to make 800. So pretty damn solid. And I got some open profits sitting there. So that's what I'm thinking over the next few weeks here. In my book, pretty much did my job on the tech stocks, built my positions in Google when you had the squeeze back at the 21, taking profits here this week into the strength, and now the S&P 500, I think could lead things lower for a few weeks. So a few different things to focus on there. As far as trade suggestions or a few things I'll be looking at, in the description of this video, go on ahead and subscribe for the free newsletter. I do the Sunday watch list videos here on YouTube. They're a little bit shorter than what I do in the Sunday premium videos. So if you subscribe to the free newsletter, you get the Sunday premium video. That's when we'll run some scans, get into the details. But those are the two things I think you pay attention to here. Technology has been strong, but not necessarily the spot on the chart where you want to load up the boat or back up the truck rather, and load up here on Amazon. I think you do that on a pullback to the 21. And then with your industrials, your transports, etc., starting to bite the bullet here, puts a lot of pressure on the SPY. And I do think you start to see this daily squeeze fire short in a flush down towards 40.50. In a bigger picture sense, it's just a pullback to the 21. So good stuff here over the last few weeks. Google was pretty good stuff there, pretty profitable trade. And now we'll see how this short position on the SPX goes. So I'll talk to y'all on Sunday. Hope you had a good week. Have a good weekend. Talk to you soon.